over to her. So Kelly, the screen is yours.
Thank you. Good morning, everyone. Thank you so much for joining us on this beautiful Monday morning. I feel very blessed and fortunate to be able to start my week off doing what I love, which is sharing with everyone what I know about MarylandABLE and ABLE accounts. As Jeff mentioned, I am the Outreach and Communications Manager for the program, but I always like to share with everyone that I am also a parent of a child with multiple disabilities. My daughter is 16 years old and she has an ABLE account of her own, and I serve as the ALR, or the Authorized Legal Representative, on her account. So I also have some practical real life experience with ABLE accounts, and as I move through my presentation, there's times that I'm going to just share with you some of the ways that the ABLE account has benefited my daughter and our family. Okay, so thank you for bearing with us as we went through that poll, because I have about an hour and I like to try to meet the needs of everyone that's on the program. So let's see here. Okay, just trying to, 1 second here. I want to make sure my screen is, you're seeing it full screen. And oops. Right. 1 second here. Thanks for bearing with me, guys. It's been a process learning how to do all this online, but well, once we're up and running, I think we'll be good. About slideshow. That's what we're looking for. Okay, awesome. So what I'm going to do is I'm going to share with you, because there's so many of us that are just learning about MarylandABLE for the first time. I'm going to try to go through everything today, and I'm going to cover sort of a bird's eye view. We are going to stop for questions, but at the end, we will have time for more in-depth questions, but I just want you all to know that I am available at the, after for follow-up. I'm going to give you an email address to be able to ask questions that we don't get to. So let's go ahead and start at the beginning and just let you know that MarylandABLE is a way for people with disabilities to be able to save money for the future and for everyday needs, and to do so without jeopardizing any of the state or federal means tested benefits that they receive. Things such as SSI or Medicaid or any types of waiver services that go along with that, right? All right, want to just share just a very brief historical perspective of where ABLE accounts came from and why. For decades, people with disabilities who really depended on critical benefits, such as those SSI benefits and waivers, they had an asset limit that was tied to their monthly benefits, which basically said that they were not allowed to have any more than $2,000 in assets anywhere. Okay, even $500 in this account, $200 in that account, didn't matter. They were not allowed to exceed that $2,000 asset limit, and if they did, they would jeopardize their benefits. Okay, so after a period of time, they would actually be disenrolled from Social Security Administration, would disenroll them, and at such a time, if they no longer had those assets, they could try to reapply. So anybody who's ever been through this process of trying to get SSI knows that it is a laborious process, and no one wants to lose their benefits, especially folks that are relying on that as their main means for their living expenses. Okay, so what was happening is people with disabilities and parents and, pardon me guys, sorry, that's my dog barking in the background, forgive. The folks that had these benefits did not want to lose these benefits, so there's a lot of folks across the country that were advocating for decades. And finally, in 2014, under the Obama administration, they signed in the ABLE legislation, and it was known as the Stephen A. Beck Jr. Achieving a Better Life Experience Act, and that's where we get the acronym ABLE. And this made it possible for people to have an ABLE account that would allow them to have money in excess of $2,000, actually up to $100,000. And we'll get into that a little bit more in just a moment. Do like to point out that ABLE legislation is not part of Social Security law. It's not part of DDA law or any, education law, because a lot of times people think that we're connected to some of the other funding sources, but we're not. We're actually part of the Internal Revenue Code, Section 529A. And in that code, we are paired with our sister organization, which is Maryland 529, the College Savings Plan, folks, okay? And I like to tell you that because we are sharing a board of directors. That is, the president of the board is our treasurer, Nancy Kopp. And we also have a board. Our board is made up of folks from the education community and the banking community. So we have a board of directors that oversees both Maryland 529 and MarylandABLE. And it's important to know that because as we move through the presentation, we're going to see how there are certain things that apply to IRS code and college saving plan folks that are similar. So I like to point that out. All right. So let's talk a little bit about the eligibility criteria for having an ABLE account. There's a lot of myths about this, and I like to start out right off by explaining how this works. And that is, in order to be able to be eligible for an ABLE account, you had to have developed your disability prior to the age of 26. Let me just stop here and say that does not mean that you had to have opened your ABLE account prior to the age of 26, okay? You just had to have had the disability prior to age 26. We have ABLE account holders that I range from under a year old to I think our oldest one is late 70s. So you can certainly open an ABLE account at any time. The second criteria that's important is that you have to meet the Social Security Administration's definition of a disability. So sometimes, when I ask, do you receive SSI or does your family member receive SSI or SSDI? That lets me know right away that you're going to qualify, if you've had the disability prior to the age of 26, that you qualify for an ABLE account because Social Security has already looked at your information and determined you eligible. So we know you're eligible. The second way that you can qualify for an ABLE account is to have a physician sign off on a disability certification stating that you have a disability that meets the definition of a Social Security Administration, okay? The reason we say that is because lots of times we're going to have individuals with disabilities under the age of 18 who many times are not going to qualify for SSI. For example, my daughter Lily is 16 and she currently receives no benefits from SSI. So the second myth about ABLE accounts is, oh, I have to be receiving SSI or SSDI in order to be able to get an ABLE account. And that is not the case. All you have to do, in my case, I was just able to take the disability certification form to Lily's pediatrician and he was able to fill that out and I just keep that for my records. And just so you know, that form is available on our website under the form section, so it's very easy to access. Let's stop here for just 1 second, Jeff, and just check in case there's any questions about whether or not someone is, eligibility process. Let's just do a quick check-in for that.
No questions yet, Kelly.
Okay, thank you. All right, the second part that I want to talk about is the account management. And I need to let you know that the ABLE account always belongs to the person with the disability. It is owned by the person with the disability and operated by the person with the disability unless they have given permission for someone to be their authorized legal representative. So This is different in some cases than some other types of accounts you can have, where you're the primary person and the account is created for the benefit of someone. For example, a college savings plan can be set up where you are the account owner and you have designated as a beneficiary one of your children. It is not that way with an ABLE account, all right? Now, we recognize that lots of folks who have disabilities may not be able to manage the account on their own or may not choose to manage the account on their own because they're going to need help. In that case, we have what is called an authorized legal representative. And I'm going to refer to this throughout the presentation from here on out as the ALR. So as an ALR, you can become an ALR one of two ways. If your family member is under the age of 18, in order to establish an ABLE account or any financial account, actually, you have to have an adult, someone over the age of 18, to be the primary legal representative on that account. So if your family member is under the age of 18, you can automatically just register yourself as the ALR. Now, what is different is once your family member becomes over the age of 18, they are a legal adult, or when they turn 18, sorry, they are a legal adult, and they're going to need to give authorization for someone to serve on their account if they need someone and they want someone. And this can be done in a couple of ways. Sometimes the ABLE account holder has a parent who is their legal guardian or who has power of attorney. Okay, and this is something that you can follow up with Elville and Associates if that's a need that you have or questions you have about the difference between guardianship and power of attorney and what works best for your family member. There's all kinds of wonderful options. I've had the opportunity to hear Mr. Elville speak many times about some great options that are out there. However, if you are not sure right now and you don't know exactly what you're going to do at this point, there's a very easy solution. If your family member wants to open an ABLE account and wants to have an authorized legal representative, you can once again go to our website, which is www.MarylandABLE.org, and go to the forms section. Under that tab, you're going to find a form called a limited power of attorney. And the reason this is a limited power of attorney is because it only gives access to an ABLE account, whereas a power of attorney over a property or a power of attorney over a person, and there's different types, and that's something you can follow up with Elville and Associates. That will give you access to medical, that can give you access to other financial accounts, but with the limited power of attorney over ABLE accounts only, that just gives you access to the individual's ABLE account. There is no fee for this. You do not need to consult an attorney. If you just download the form, and the Assistant Attorney General for the state of Maryland created this form that can be used by any ABLE account holder here in Maryland. So it's just a form that you fill in the person's name and identifying information, and the ALR is identified. You just take it to a notary. It's signed by both parties in front of a notary, and you just submit that to our program manager, and that's as simple as that. Okay? Any questions about power of attorney and being an ABLE, an ALR on the ABLE account?
Well, Kelly, we do have one question so far. The question is, can the SSI money be used as the source of the ABLE account?
That's a great question. You know what, I get that so much. I actually want to read to you what I have written about this, because there's been a lot of confusion in the past. Now, according to the SSA POMS update that was issued on April the 16th of 2020, Social Security benefit, this is what it says: Social Security and SSI monthly benefits, monthly benefit payments can be directly deposited into an ABLE account because they are considered acceptable types of financial accounts. For more information, see GN02402 period 030B.1. And if you email me that, I can give you the specific directions. But it's going to give you the actual update from Social Security Administration. So the answer is yes, you are able to use money from your Social Security benefits to put money into your ABLE account. Okay, a lot of people, and again, I don't have any experience with this myself because my daughter does not receive SSI benefits, but what I am told that the vast majority of people with disabilities are doing and their family members is that they're using that SSI money for the things that you can use SSI for, and money that is remaining after whatever they're expending that on, they're using that to put in the ABLE account so that they don't have to worry about being over-resourced.
One more question we have, Kelly, is can the adult and parent jointly be on the ABLE account?
It's not going to ever be a joint account. It's always going to be owned and operated by the person with the disability. So for example, my daughter Lily is the account owner. I am on her account as the authorized legal representative. So we both have access to the account, but it is now Lily's account, and it will always be her account under 18 and over 18. So that's why if the person with a disability needs assistance, there is that provision made by having an authorized legal representative.
Thanks, Kelly.
Sure. Okay. All right. So we're going to talk about some key features of an ABLE account. And this is information that's going to apply to ABLE accounts nationwide. There's currently 42 programs across the country that offer ABLE programs. Back in 2014, when the legislation was passed, it was federal legislation that gave states the opportunity to open up ABLE accounts, but it did not mandate that they do so, and it did not provide any funding to operate these programs. So it's taken some time. Here we're 5 years after the legislation is passed, and we have 42 programs nationwide. So many of the, all of the programs that all of the states that have ABLE programs are going to have the things that I'm going to be talking about on this slide. We are also going to be talking about features that are specific to MarylandABLE, as the federal legislation did give states the opportunity to tailor their programs, certain benefits and not benefits, but certain features of their program that would be tailored to the people in their state. So, but everything we're going to talk about right now is going to be applicable to ABLE accounts nationwide. The first thing is that there's easy enrollment. Most programs across the country only offer online enrollment because it's the easiest and the quickest. However, in Maryland, I will let you know that for folks that don't feel comfortable with that format, we do offer a paper enrollment kit. The funds in an ABLE account are very easily accessible because, again, it's like an online banking situation. We can receive to an ABLE account $15,000 per calendar year. I do need to let you know that amount does change from time to time because it is tied to the federal gift tax law. And again, this is where you're going to see us being part of the Internal Revenue Code. This is where you're going to start to see how that impacts us. So as the IRS changes things in the tax code, such as the gift tax law, this will change for MarylandABLE as well. When we launched our program, this amount was $13,000 a year. And, a year and a half later, it has been moved up to $15,000. So if the IRS makes this amount higher, we're going to be able to receive that amount of money in contributions per calendar year. The most important thing that I want you to remember about ABLE accounts nationwide is it gives the account holder the opportunity to save beyond that $2,000 asset limit. At this point, it gives people the opportunity to save up to $100,000 in the ABLE account before it impacts their benefits. So, wow, talk about a big difference. I mean, at one point, you could only have $2,000 and you had to really watch it so you didn't go over $2,000 or you're going to jeopardize your benefits. Now you can go all the way up to $100,000 and you don't have to be worried, you know, getting close to that 2,000. And not only that, but think about people over the years that were trying to save their money for things that they really needed and wanted. Perhaps it was a down payment, a deposit on their own apartment, or you know, saving up for an adapted vehicle or to make adaptations to a vehicle. I mean, all kinds of things, very ticket items. But how can you possibly save for these things if you're never allowed to exceed $2,000? So it really was a game changer for people with disabilities to give them much more independence and a much more, many more options in their life that they weren't able to access before because they couldn't save their money. The other thing that's really important that I want you to remember is that even if you exceed that $100,000 account limit, okay, you can go over $100,000. But what would happen is you would impact your SSI monthly benefit check. Okay, let's just say you're receiving the $700 and some dollars a month and your account balance exceeds $100,000. If you did let it go over 100,000, you would stop receiving your SSI benefit monthly check after $100,000 is reached. But here's the important thing. You are never disenrolled from Social Security. What's going to happen is you're going to go into a state of suspension. You're not being disenrolled, you're not being booted out, and what's going to happen, you will no longer receive that monthly benefit check while you're in a state of suspension. But should your account balance fall below $100,000, what's going to happen is, you know, let's say you had $100,000, you spent $20,000 on it, on putting a new wheelchair ramp or something in the front of your house. You're down to $80,000. Automatically, what's going to happen, Social Administration is going to be alerted to the fact that your balance has fallen below $100,000 and your monthly benefit checks are turned back on, okay? So this is really important to remember. Go over $100, but you may no longer receive your monthly benefit check. And another thing that I want you to keep in mind is even if you do go over 100,000 and you should stop receiving your monthly check, you are not going to lose your Medicaid or any of the Medicaid waivers that are attached with it, because remember, you're not being disenrolled. So money in an ABLE account, you're protected from from being disenrolled from SSI. You're protected from losing your Medicaid and waivers. Money outside of an ABLE account, in a regular savings or checking account, if you exceed that $2,000 limit, and after a period of time you continue to exceed that $2,000 limit, you can be disenrolled from Social Security and you apply. That is the main difference between other types of regular banking and checking accounts and it's the money in the ABLE account is going to be earning the earnings that you have on your ABLE account funds are not going to be taxed. They are not going to be taxed while they're in the ABLE account, and they will not be taxed when the money comes out of the ABLE account, providing that you're using the money for what we call qualified disability expenses. And I'm going to talk a little bit about that in a minute, but just so that you know, it's not, you know, one of those retirement accounts that you have to wait until you're 65 to access the money, or if you take the money before then, there's a tax penalty. No, you can have money in your ABLE account. Interest that you earn is not going to be taxed. You're able to take the money out without a tax penalty, provided that you use the money for a qualified disability expense. And one final thing before we pause here is I want you to know that rollovers are possible from one ABLE program to another ABLE program, because these are all guidelines for the federal legislation. So for example, when ABLE first launched its first program, it was the state of Ohio. They were the only ones that had ABLE programs. People from all over the country opened up opened up an ABLE account with the state of Ohio. But then, as their own individual state opened up an ABLE program, they were able to transfer or roll over those ABLE accounts to another state. So I'm going to stop here because I know we've covered lots of information, and these are usually areas I get lots of questions.
You're right, Kelly. So we do have a few questions, and the first question is, my husband and I have a consent order issued in Anne Arundel County giving us power over financial, medical, and resident for my brother. Is this sufficient to be power of attorney for an ABLE account?
Okay, Jeff, can you read that again? What is the name of the document?
Sure. It's called a consent order issued in Anne Arundel County giving power over financial, medical, and resident for their brother.
Okay.
So is this sufficient to be power of attorney for an ABLE account?
You know what, I will definitely need to get back to you on that because I'm not an attorney, so I don't want to state that either. You know, I could follow up with someone from Elville and ask that question, or I can check with our Assistant Attorney General to make sure that it is, but I want to make sure I always want to make sure I give people accurate information, and I'm not really familiar with that. So if you feel comfortable sending an email to either Jeff or me at questions@MarylandABLE, I'd be happy to get back with you on that one.
Yeah, I'll note that question, Kelly, and we'll get a response.
Okay, thank you.
Next question is, can 5 years of gift be given at one time, i.e. $75,000, like education 529 plans?
Okay, that is an excellent question. Thank you for whoever asked that, because it's important to note that ABLE accounts can only receive $15,000 per calendar year. So in a situation like you're describing, you can't deposit all of those at one time. This is also true of folks who receive settlements from medical or accident settlements or things like that. It's also true if someone designates your family member in their will and they leave them money or they name them in their insurance policy. This is where it's important to know that you have the option of establishing a special needs trust. And this is definitely Elville's area of expertise. We've been fortunate to co-present in the past, and I usually turn these things over to Mr. Elville, and he answers them, because there's different types of special needs trusts, and you have to consult with him to see which kind works best for you, your family member. But this is something that we feel that ABLE accounts and special needs trusts don't cancel each other out. They work well as collaborative tools because there's differences between special needs trusts and ABLE accounts. The primary benefit here in this situation that you've named is that you could take that amount of money and deposit that into a special needs trust, because it doesn't have a limit on how much you're able to open that trust with, whereas ABLE accounts can only be $15,000 per calendar year. What a lot of folks have done is they've established special needs trusts with you know, whatever their initial funds are, and every year they contribute $15,000 into the ABLE account, because once the money is in the ABLE account, it's very easy to access the money for the person with the disability to be able to access that money for whatever their needs are, or for the ALR to be able to access this money, and instead of having to go through the process that you go through when you have a special needs trust and the trustees, and you know, there's a process with that. So it's definitely something you'd want to just find out what best suits your family.
Okay, thank you. Next question is, if you are transferring funds from a 529, can you transfer $99,999.99 at one time, or can you only transfer $15,000 per year?
Okay, another great question, because yes, one of the things I'm going to talk about is rollovers from a 529 college savings plan are possible. And the thing with that is, because of the annual contribution limit, you can only roll over 15, you have to ladle it out. So if you're going to roll money into an ABLE account, it would have to be done at $15,000 per year. You don't have to close out your 529 account. You can just every year roll over $15,000. But it cannot, unfortunately, be done all at one time because of that pesky annual contribution limit.
Next question is, the discussion is focusing on SSI payments. My child receives SSDI payments. Are the rules and requirements the same, or is SSDI handled differently?
SSDI does not have the same asset limitation. Usually people that receive SSDI do not have to worry about keeping their $1,000, but folks with SSI do. So sometimes we have accounts that receive SSI and SSDI. Some folks are just receiving SSDI and are using this as a way of, you know, tax-free. That's, you know, and sometimes again, I'm not an attorney, so sometimes there's folks that have other, you know, with the Medicaid and waiver, different types of waiver, so they like to be able to protect their savings so that they don't get into any situations where they're jeopardizing waiver service.
Thank you. Next question, is this $100,000 limit the combination of deposited principal and its earnings? That
would be correct. Yes. So that $100,000 limit, if, you know, $95,000 was contributions and $5,000 was interest earned, and I'm just making that number up randomly, and you reached $100,000, then yes, that would be considering hitting that contribution, I'm sorry, that account balance limit.
Okay, and kind of along the same lines, maybe a slightly different twist. If you have put in just under $100,000 and it earns interest, taking your balance to $105,000, would the SSI be suspended?
At $105,000, yes. Once you exceed the $100,000 in ABLE funds, plus the $2,000 that you're allowed to have in another account, according to SSI, then it would be suspended at you know, at $2,001. Once you went past that limit, it would jeopardize your benefits. Yes.
Okay. Should someone have a special needs trust and an ABLE account? Is that redundant? Do they work together or against each other?
Another great question. Lots of people have both. Again, for that reason that especially family members, parents that want to be able to plan for the future when they're no longer in the picture, and how they want to be able to distribute their assets to their family members as well as their children with disabilities. They have to be able to put it in a special needs trust that's going to protect that person's assets. And that cannot be done with an ABLE account only, okay? So an ABLE account is going to be very beneficial for someone who needs to be able to access the funds in the ABLE account relatively quickly. And I know if you guys follow up with Elville with that question, they will be able to give you some examples of the difference between special needs trusts and ABLE accounts as well. So with the money in a special needs trust, there is a trustee that's appointed for that, and sometimes there's a process that you have to go through in order to access that money, and that can take longer than would take to be able to for the ABLE account for a purchase. So it's the ease of accessing the funds is one of the main areas for a benefit account, but one of the biggest benefits of having a special needs trust is being able to put large amounts of money into an ABLE account and to be able to do that quickly. Sometimes I get calls from somebody saying, oh my gosh, I didn't realize this, but you know, Aunt Elizabeth passed away and I didn't need this, but she left, you know, $50,000 to my son and he has SSI and I need to get an ABLE account established right now because he's going to lose his benefits. Well, we're not able to help you in that area. You'd have to put that $50,000 into a special needs trust. So it's always good to have your options, and many people choose both.
So a couple more here, Kelly, then we'll move on. Can an individual receiving SSDI exceed to $100,000 and avoid taxes while using funds for ODEs? I'm not sure what ODEs are. Maybe you know what that is.
They meant qualified disability expenses instead of ODE.
Oh, QDEs. I'm sorry. Yes, I apologize. Yes, that's correct.
Can you repeat that question again?
Sure. Can an individual receiving SSDI exceed to $100,000 and avoid taxes while using the funds for QDEs?
And they wanted to know if they could exceed 200,000.
100,000.
If they wanted to exceed, you know, I again, since I'm not a specialist in SSI or SSDI, I would definitely check that out with Social Security Administration or, you know, some of the folks at Elville, they know what the law is. I don't want to offer any guidance in that area. I do know that SSI and SSDI are different in some areas, but I'm not really an expert in that area.
And this, along the same lines, might be a question for our SSI attorney, SSDI. What is the difference between SSI and SSDI? Or perhaps you can shed some light on that.
I will give you my layman's term definition that I learned from listening to Mr. Elville, but basically SSI are benefits that are received if the person has not worked and paid into that system, okay? SSDI is if the person has been working, paid into Social Security funds, and then becomes disabled, or they inherit the benefits of a parent who has worked and paid into them when they retired. So it has to do with whether the person, you know, has worked and paid into the system. That is incredibly layman's terms.
You want to do one more for now, Kelly?
Sure.
All right. To answer at some points, what are the advantages of having an ABLE account if the individual does not end up qualifying for SSI, Medicaid, or waivers?
Okay, great question. I would say the biggest benefit is that it allows you to save money with tax-free earnings, okay? And it also allows you to have tax benefits for contributions made to the ABLE account. Okay, so if you're putting money into a regular savings account, you know, you're going to pay interest on you're going to pay taxes on your interest that's earned. And the money that you put into a regular savings account, you're not going to get any income for that either. And we'll talk a little bit about those benefits. So I'm going to hop on to the next thing because this is also an area. Well, we did talk about rollover. Somebody had a question about that. Just to mention the fact that rollovers can be made from a 529 college savings plan to an ABLE account, and we talked about having to ladle out that money at $15,000 per year. The other thing I like to point out is if the person that owns the ABLE account is working, they may qualify for what we call the able to work. People who are working, who are not contributing to a retirement account, and whose employer not contributing to a retirement account on their behalf, it gives them the opportunity to contribute above and beyond that $15,000 annual contribution limit, okay? They're actually able, if they meet those criteria, again, not contributing to a retirement account, and their employer's not, can contribute up to $12,490. This is the amount for the year 2020, because again, this is established by the Internal Revenue Code. That number that you're seeing is equal to the federal poverty level for a one-person household. So this does time, it's changed, I know the last change. So if they do work and meet the criteria, they have an opportunity then to actually contribute $15,000 from any source, from anyone can give money to an ABLE account, and $1,490 from their personal income. All right. So that is, oh my goodness, I cannot believe I cannot do the math. Unbelievable. It's Monday. $27,490 would be the maximum amount of annual contribution for someone who meets all of the criteria for able to work contributions. So that's a really nice thing. We always like to tell people, if you are working, always designate your contributions as an able to work contribution. That way, if someone wants to contribute money to your account, a family member, anyone, they would contribute to that regular standard contribution. So that way you can exceed that $15,000 limit. All right. It's important to note that if the individual is working, okay, and they're making $20,000 a year, the maximum amount that they could exceed the standard contribution would still be $12,490. Okay, so you can't contribute above and beyond that limit of $12,490 if you're earning more than that. Okay. Want to give an opportunity to talk about qualified disability expenses. This is usually a big area where we have lots of questions, and I'm going to just put up these categories. They're just categories. They're not specific examples, but you can see the types of things as they fall into categories under health. That would be your doctor co-pays, dental visits that are not covered by your Medicaid. You can use it for rent or mortgage payments. You can use it for school, either a traditional university or a trade school. You can use it for job coaching, transportation, things such as Ubers, taxis, purchase a vehicle, to make adaptations to a vehicle, any types of basic living expenses. Assistive technology would be things such as a computer, a cell phone, any type of adaptive equipment that you would need. Financial management, if you consult, a tax advisor or have your taxes done, you can use the money for those types of professional services. If you wanted to establish a special needs trust and you need to see an attorney, you can use money from your ABLE account for legal fees. These are just some basic examples of things. Let me give you the guiding principles behind what is a qualified disability expense. And the way it's written is it's anything, any service or item that supports the account holder in his or her health, independence, or quality of life. So that's a really broad definition, and that's why we don't list all the specifics of things, because it's different for everyone. But what you have to ask yourself is, before you use the ABLE account funds for a purchase, ask yourself, does this item or service support me or my family member in health, independence, or quality of life? Let me give you an example, okay? My daughter wanted to take a dance class, an inclusive setting in the community. She wanted to do that. So I used the funds in her ABLE account to pay for her dance class. If you were if you were to ask me, I think this meets that criteria in a couple ways. Definitely her health. You know, exercise is good. Dance class is supporting her in her health. It's also supporting her in her independence because she's in an inclusive dance class where she's having an opportunity to meet folks that, you know, are from all different, you know, backgrounds, not necessarily just the folks in her special ed class, and also her quality of life. It's something she wanted to do. So I have no problems justifying that. Now, let me ask you this. At the end of the 9 months, they had a, what do you call those things? The recital, the dance recital. So I had to order the costume, the little tutu and the tights and these special little rhinestone clips that went in her hair, because that's what everyone in her dance class had to wear as a costume. Was I able to pay for those items out of her ABLE account? I was, because these are things that supported her in being in that dance class. How could she participate in this if she didn't have the same costume and everything? So yes, those are some strange examples of things that I could use as a qualified disability expense. And remember, there's nobody at MarylandABLE that you're checking in with every day saying, you know, can I buy these ballet slippers with my ABLE account money? It's really just going to depend on how you can justify whether it supports health, independence, or quality of life. Because at the end of the day, the only person that you're going to have to ever be accountable to would be the IRS, because we're part of the IRS code. So in the event of an audit, and you're ever sitting across the table from an IRS auditor, and they ever said to me, what is these rhinestone clips and this little, you know, tiara here? Why is this a qualified disability expense? I would be able to explain to that person how that supported Lily in her dance class and being in the recital and being included in the community. So what I recommend, everyone, just maintain your receipts, and you know, in the event of an audit, you're not any more likely to be audited by the IRS, but you're also not any less likely to be audited. You want to be able to support your purchases. Okay, let's stop here, because this is usually an area where we get lots of questions about qualified disability expenses.
Thanks, Kelly. So first question is, let's see here. How do you prove disability was before the age of 26? He is 43 now. His original doctor is retired. He did receive SSI before the age of 26.
Okay. I would say that if you went to the current doctor and you know, shared with them the medical experience and the fact that he did receive SSI, you know, that would be something that you can take up with the current physician, and you would just bring that form with you that's available on our website. It's called a disability certification form, and the physician could fill that out, and you just maintain that with your records. You don't, you know, it's just a form that the doctor signs and fills out.
Okay, if I have a special needs trust already established, can I add a statement in the will or trust to simply move $10,000 a year for 10 years into the trust, which will allow the trustee additional options and maybe an easier management of his willed funds?
You know, lots of folks do that. As far as the process goes, I don't know how that is. That would be a good question, Jeff, for you to maybe follow up. It depends, I guess, on the type of special needs, right?
Yeah, I'll preface that. I'll go back and that was restated immediately after $10,000 a year into the ABLE account, Kelly.
Yes, I know that people do have it written that they want to transfer a certain amount of funds into an ABLE account from a special needs trust. But I don't want to say 100% yes, because I don't know what kind of special needs trust you have and whether you're allowed to make changes to it. That would be a legal question. But I do know that there are definitely folks that have special needs trusts that do make that provision. So I guess it depends on your type of trust.
Next question, how do ABLE accounts work with individuals that are receiving SSI and SSDI?
It would be the same. It doesn't change the way they operate. It's the same.
Okay, and I think we're going to get to this. Can ABLE accounts earn interest? And I think you'll probably get to this in just a few minutes, Kelly.
Yes.
Okay, so we will get to that. Next question, is a beneficiary set up on the ABLE account, or what happens to the money at the passing of the disabled owner? I think we will get to that as well, correct?
Yes, I will go ahead and answer that right now. So remember, the ABLE account always belongs to the individual with a disability, and you cannot designate a beneficiary to the ABLE on the ABLE account. Okay, that is, it's always has to be the person with a disability. So what's going to happen upon the passing of a person with a disability is any money that's remaining in the ABLE account can be used to pay for any outstanding expenses, including burial expenses and any final expenses. Then what's going to happen is that money that's in the ABLE account is going to become part of that person's estate. And whatever the procedures are that happens with your estate is what's going to happen. So, this is where we always recommend consulting an attorney, a special needs trust attorney, an elder care attorney, somebody that can help you plan for that. But the money that's in the account is then going to become part of that person's estate. So let's just say that it is designated that the money is to be given to the parents or to a sibling or whatever. If the person gives it to a sibling or a family member that has a disability, the money can just be rolled into their ABLE account. But let's just say they don't have a sibling or a step sibling that has a disability. The money would just be then designated to go to another family member. At that point, the money being withdrawn, and when you close out that ABLE account, the money that's being withdrawn is going to be subject to interest on the earnings. You can receive the money, but you're not going to receive everything without paying interest on the earnings or taxes on the earnings. Okay. The person receiving the funds will have to pay taxes on the earnings. And you would definitely need to consult with, an elder care attorney or someone that can help you with those final arrangements for your family member, not just ABLE account funds, but other things to determine where that would go.
Okay. Interesting question here. Would a life insurance policy be included as a qualified disability expense, and would it specifically have to be listed as, quote, burial insurance?
Oh, that is a very good question. Jeff, could you send me that one also?
Yes, I will.
Yes. Yeah, again, I always like to give accurate information. I will check with our legal team and make sure I know what to tell you about that.
Another question, what if didn't receive SSDI till the age of 26? I know that we kind of talked about SSDI, but that's a question here.
Okay, so as long as the person had the onset of their disability prior to the age of 26, even if they didn't receive the benefits until they were 26 or older, as long as they had the onset before they were 26, they would qualify for an ABLE account. And just as a little side note here, ABLE account programs and people with disabilities and advocacy groups across the country are really advocating hard for what we call the Age of Adjustment Act, which it's Senate Bill 651, that would allow people to open ABLE accounts that up to the age of 46. We want to move that up to the age of 46 because there's so many people out there, veterans, people with traumatic brain injury, MS, all kinds of disabilities that people experience with a later onset that just aren't able to enroll in ABLE accounts or have access to ABLE accounts because of that age limit. So it's something that we've been working on and we will continue to work on. But right now, you have to have had the onset prior to age 26.
One more, Kelly. Are gifts a qualified expense or a donation to a church?
Ooh, great question. No, they're not. The money that is spent has to be spent on the person with the disability to support health, independence, and quality of life. We cannot allow gifts. So even on Mother's Day, Father's Day, you cannot use the money in an ABLE account to purchase it for someone else. Because again, I think they're doing this for the protection of the person with the disability, because there are some folks that could be very vulnerable. If people are saying, hey, you've got this ABLE account, can we use this because I need this, can I need that? The answer is no, you're not able to use it for gifts.
Okay, Kelly.
Okay, so let's talk a little bit because we're getting short on time. I want to try to cover some other things. In order to establish your account, you're going to do that online with a minimum deposit of $25. That's all it takes to start the account. You can make contributions to an ABLE account by a check or electronic transfer. And I just need to let you know, we talked about that $100,000 win limit. I want to try to throw in another number here to confuse you because we've got to try to do that whenever possible, right? An ABLE account can accept contributions over the lifetime of the account up to $500,000, okay? So once it reaches $500,000, you can no longer make contributions. Now again, this could change because it has changed from a $350,000 account lifetime limit to $500,000 because again, we're tied with that 529 IRS code. This changed when the college savings plan changed this from $350,000, moved it to $500,000. We also are able to increase our lifetime limit. And fun fact of the day, that $500,000 limit is established because that is what it costs for a child born today. By the time they are eligible for college, that will be the cost of a college education, $500,000. So as the really smart mathematicians figure that out, that future costs, this can change from time to time. Okay, all right. So I'm going to skip past this one because we're running out of time, and I want to talk a little bit about some of the features that are unique to MarylandABLE account, and that is that we have an online gifting platform that comes part of your ABLE account. It's on your dashboard. You can set up a gifting page, so for holidays and birthdays and things like that, instead of people sending gift cards or whatever. You can send them a link to your ABLE account. It does not give them access to your private information. It just gives them the opportunity to make a contribution. But all contributions that are made to an ABLE account, okay, if the person that's giving the contribution is a Maryland state resident and they're contributing to an ABLE account in Maryland, they are eligible for an income tax deduction up to $2,500 per person per ABLE account. So if you make a contribution on a gift page for a birthday and holidays, you're able to use that as an income deduction on your taxes, which is really nice. This is sort of similar to a GoFundMe page in a lot of ways, except for the fact that money that you send in through a GoFundMe page, a portion of those funds goes to administrative fees to the GoFundMe administrators. 100% of what you give through the gifting platform goes into the person's ABLE account, okay? And remember that an ABLE account can be funded by anyone. I could, if you had an ABLE account and I won the lottery and I said, hey, everyone that was on that webinar that I did today, I want to give everyone money in their ABLE account, I could contribute money to an ABLE account through your gifting page. Doesn't have to be a family member. The other thing, I wish I had more time to talk about the ABLE prepaid card. This is a wonderful tool for people who use their ABLE accounts as a very transactionary account. You know, people use ABLE accounts for different reasons. Some folks want to establish an ABLE account for a very young child, you know, a couple months old. They want to establish this ABLE account, start saving for that person's future, saving without having to pay taxes on the earnings. They get a tax deduction, income tax deduction for their contributions. They want to save it for the future. Other folks want to use it very transactionary. They put money in every month, but they also spend money every month. The easiest way to do that is with the ABLE prepaid card. It is something that works online and in stores anywhere that Visa and MasterCard are accepted, and the money just comes out of the ABLE account. It is loaded onto the ABLE prepaid card, so it's not like you're accessing the actual ABLE account itself. You have to load money from the account onto a prepaid card. Think of it like those gift cards that you see at a register when you're checking out, where you can purchase an American Express card or a MasterCard, and you determine how much money goes on that card. It is very similar to that type of setup. So you, the account holder or the authorized legal representative, can determine how much money you want to load onto that prepaid card. I could probably do an entire webinar on just how I can use this tool with my daughter Lily, and you know, one day, hopefully many decades from now, when I'm not here, I want her to be able to make decisions about how she uses her money, spends her money, saves her money, budgets her money. And this has been a really great tool because it gives her an opportunity to practice. I put a limited amount of money on her ABLE prepaid card and give her the opportunity to you know, get some experience spending her money and saving her money. And it's a way that I can do that safely. The prepaid card also has account spending limits if you want to set parameters on that. You can turn the card on or off if, you know, your family member took the card with them to the movies and came home and can't find it. You're like, oh my gosh, the card's missing. You can go online and switch the card off so that people can't use it. And then, of course, the next day when you find it in the washing machine, anyone's ever done that before, you can go switch the card back on. So lots of features. I could probably do an entire session on the prepaid card itself, but that's available to you. It doesn't come automatically with the ABLE account. It's something that you can opt into. There is a cost for it. It's $1.25 per month. So again, if you're a person that's not going to be accessing the funds in your account often, it doesn't make sense really to have an ABLE prepaid card, because why pay $1.25 if you're not accessing the funds? But for those who use it frequently, it's worth it. Okay, we talked about some of the tax advantage. Oh, well, we're on payroll deduction. Okay, so for folks who are employed that want to make a contribution on a regular basis from their account, we talked about the folks with the able to work benefits. They can set payroll contributions up directly from their paychecks. I believe authorized legal representatives can do that as well. The tax incentives here in Maryland is, remember, we've got $2,500 per contribution per ABLE account. So if you have someone with an ABLE, you know, you have 2 kids with an ABLE account, you can contribute $2,500 to each ABLE account and claim that as an income deduction on your taxes. If you're married, filing joint, that's $5,000 per ABLE account contribution. Folks that have ABLE accounts in other states cannot take advantage of the income deduction on their Maryland state taxes. This is also true of grandma or Uncle Steve who lives in Florida. If he makes a contribution to a Maryland ABLE account, he's not going to be able to use the income tax deduction because he doesn't pay Maryland state income taxes because he lives in Florida. So those are some things to think about. Account fees, the cost of having an ABLE account is $35 per year. This is an annual fee, but it is prorated. So this, you know, if people that opened an ABLE account last week, in June, they're not going to pay $35 for the year because they didn't have the account for the first 5 months of the year. This is prorated, and it is also assessed quarterly. So I think it's $8.75 every 4 times a year. Okay. There's also some asset-based fees on investments if you choose the investment option, and I hope I have a minute or two to talk about that. The different types of accounts we have is you can use the cash option, which is just like your basic money market account that you can open anywhere at any of the banks. You know, it's your savings checking account. It's what we call our cash option. The cash option is going to earn whatever the standard interest rate is right now. Of course, it's very low because all interest rates are low on our across the country, but that's one option. The other option that people sometimes choose is an investment option, which gives you an opportunity to invest your money in 3 different options. One is the conservative option, which is an investment in mostly bonds. About 80% is invested in bonds with 20% in stocks. The moderate is a 50-50 split between stocks and bonds, and the aggressive is just flipped the other way around, where it's much more invested into the stocks and just a little bit invested in bonds. And you can choose to split your investments between, you know, some of it could be in the cash option, some could be an investment option, you know, 20% in cash, 80% investments, vice versa, however you determine it. Again, we really encourage you to look at what's best for your family member, how you're using the ABLE account. Those people who open up an account and want to just use it for savings long term, you know, sometimes they choose the investment option because their opportunity to earn interest is better over time in an investment option as opposed to keeping it in a cash option where the interest rates are lower. But again, there's no magic answer to that because you can't predict the markets, and we recommend consulting a financial person to make the best choice for your family. Important to know, you can change your cash and investment options up to twice a calendar year. Okay, so last year, I don't mind sharing, I had a split between the cash option and the investment option. And as many times as I do this presentation, I kept forgetting that while the market was doing so well, I could have switched my split to have more money in the investment option because the market was doing really well. And I didn't do that, but I could have done that. So let's just say things are going well in the market and someone chooses to put more in investments, you can do that. But if the market takes a turn, you can also switch it back to the cash option. Real quick about enrollment. When it comes, if you decide to open an ABLE account, what you want to do is you want to go to our website, www.MarylandABLE.org, and I definitely encourage you to type it out. If you just Google MarylandABLE, what could happen and what has happened to people is they type in MarylandABLE on Google and it comes up with this ABLE now in Maryland, and people opened an ABLE account and then they find out later in the year that they are with ABLE Now, which is a Virginia-based program, and they're not eligible for the income tax deductions. So we do recommend going directly to our site, and I'll have that up on the last slide. But once you get there, definitely peruse the website. We have a great frequently asked questions section that's really helpful. Should you choose to open ABLE account, in the upper right-hand corner, you're going to see a little red oval that says let's go or open an ABLE account. You click on that, it's going to ask you for some basic information. So the person's name, social security number, and the authorized legal representative's name and social security number and address, and a linked bank account. Okay, so you're going to link your ABLE account with a current and existing bank account. And this is going to be a personal choice depending upon what works best for you guys, for your family, for the ABLE account holder. In my case, I have linked the ABLE account to my existing checking account, my regular checking account, because again, my daughter doesn't receive SSI benefits, doesn't have her own checking account. She's only 16 years old. It wouldn't make sense for me to link it to anything but my own checking account, because I'm the one, her dad and I are the one that's funding her account. So I just do those online transfers from my account to her account, and when she needs to make purchases, I have the ABLE prepaid card, and it works best for us that way. Now, that's not what works best for everyone. You need to determine if it's, whatever account works for you is fine. If you have any questions, once you open an ABLE account, we have some great customer support that's available Monday through Friday. Normally, they're available 9 a.m. until 8 p.m., but during the pandemic hours, they're limited right now from 9 a.m. to 5 p.m., but we're very hopeful that they're going to be opening up again those extended hours, so you can call them, give them your account number, they'll plug it in, and they'll see your screen that you're on, and we'll walk you through any kinds of transactions that you may need help with. If you have any questions about it, just as a real quick review, $25 is your minimum deposit account. That's not a fee, that's the initial contribution to your account. $10 is the amount that is the minimum deposit after that. Some folks will say, I'd like to set up auto contributions to my ABLE account. I want to put in, $1 a week or $5 a week. The way that the bank has set this up is it has to be a minimum of $10. It's up to you. You can deposit your initial deposit and not deposit anything again for 6 months. You can set up auto deposits as long as it's $10 when you do that next contribution. $35 is the annual account maintenance fee. Again, that's prorated, so anyone opening an account in June is not going to be paying for the first five months. $1.25 is the cost of the prepaid card if you choose that option. $15,000 is that annual contribution limit for this year. Unless you qualify for Able to Work, again, that's for folks who are employed and not contributing to a retirement account, and their employers not contributing to a retirement account can qualify to contribute additional money beyond the 15. $100,000 is that limit to which if you exceed the $100,000, your monthly SSI benefit would be impacted. But remember, you're not going to be disenrolled from Social Security. Should that balance fall below $100,000, you will automatically receive your monthly benefit. The other thing that's important to note about that is since you're not disenrolled, you're not going to lose your Medicaid and the waivers that are associated with that. $500,000 is the lifetime account limit, after which you reach that. You can't contribute beyond $500,000, but again, if you took some withdrawals from that account to pay for qualified disabilities expenses and fell below $500,000, you could, again, contribute to the account. $2,500 is that state income tax income deduction per contributor, right? This is our contact information. Again, our website is up there. I encourage you to type that out on your search. Our customer support is available Monday through Friday. If you have questions that I didn't get to, I can be reached at questions@MarylandABLE.org. Okay, this is a shared email box between myself and the program director. There's only 2 full-time employees for the state, for MarylandABLE, for the entire state. So we share this questions@MarylandABLE email box so that if I'm not available, Betty Ann's available, and vice versa. We invite you to follow us on Facebook and Twitter and find out other outreach events that we have and other learning opportunities. Jeff, I know we don't have that much time.
That's fine, Kelly. Do you have a few minutes to stay on if we do go over by a few minutes?
Absolutely. I'm here for you guys. Let me know how I can help. I just want to be conscious of people's time, but
thank you.
Need me.
So just real briefly, I know some people will probably have to jump off at 11:30, but we want to thank Kelly for her expertise. Obviously a great resource, and we want to thank her for her partnership. So we will answer the questions that we have in queue. For those that do have to jump off, just want to say, please take a couple minutes to answer that survey that's going to be coming your way. If there's anything that we can do here for you, Elble & Associates, let us know. We offer free consultations for anybody with a special needs planning need. We're happy to be a resource. So let's jump to those questions. We do have a few of them. So the question, first one, are there ever any exceptions to ABLE account or SSI account maximum amount rules if the government issues future CARES Act payments?
You know, because this is federal legislation, the account limits are going to be what the account limits are, that $15,000 contribution limit and the 100. Now, if there's a change in federal legislation, that, you know, that could happen, that we could, you know, see that change. But I will say over the years, we've never seen it change anything except for the better. Again, with this income, the asset, the contribution limits going from 13,000 to 15, so on and so forth.
Next question. I think you might have alluded to this. Do I need to keep all the receipts for the money that is taken out from the ABLE account?
We definitely recommend keeping your receipts. Again, they're only for your purposes unless you were to be called into an audit and you would be able to provide them. So same thing with your other tax-related information. I believe the rule is keeping it for 7 years. Okay. And oh, by the way, the prepaid card that I was telling you about, that is also a great way to be able to, you can upload your receipts, store them in there. You can run reports, categorize them by how you did your spending. A lot of nice features on that prepaid card. So that's another option for maintaining your receipts.
Okay. Can any bank, savings and loan, financial institution maintain ABLE accounts?
There are no brick and mortar buildings that provide ABLE accounts. ABLE accounts are only available through an ABLE program, a state program like MarylandABLE. So you can't go to PNC Bank and say, I want to open an account. You're going to use your existing checking or savings account and link it with an ABLE account, and you can open the ABLE account online at our website, or you can go to our website and download the forms, like the paper forms, to open an ABLE account as well.
And Kelly, other ways to take money out from the ABLE account other than the ABLE card?
Yes. So that linked bank account that we talked about, that's how all money is going to go contributed and get into the ABLE account. It's also the way that money comes out of the ABLE account. So you'll just transfer money from the ABLE account back to that linked ABLE account.
And who manages ABLE account investments, and what is their annual rate of return pre-COVID?
Good. I can answer part of that. Vanguard is the company that manages our investments. They actually take care of that for us. We are also, they are also reviewed by our board of directors. We also have an investment director of investments that works for Maryland 529, MarylandABLE, that also looks at those investments. So that's a third person that's monitoring that. And we also have hired an outside team that looks at the investments to monitor them, to make sure that they're, monitoring that they're making good choices. And I do not know the rate of return on those investments, because again, it depends on whether somebody chose the moderate, the aggressive, and I don't know all the different rates of return for all the different types of investments prior COVID or even today. I don't know.
Is there a limit to how much you can load onto a prepaid card?
I believe the limit, I think you can only move over $2,000 a day, like at one time. Like I think it's a $2,000 transfer over per day. And it's really up to you how much money you want to choose to leave on your ABLE prepaid card.
Okay, have you ever seen ABLE used for kids with terminal cancer? I've heard people starting GoFundMe pages for kids, but wouldn't this be more cost efficient?
It would definitely be more cost efficient. We actually have been doing some outreach to Hopkins and some of the places that provide medical treatment to kids with childhood cancer. It definitely would be a good option for them because there's so many expenses that they incur. It would be a great way for people to be able to contribute to a family that is experiencing cancer treatment for their child. And hopefully, best case scenario, the child receives treatment and never has to have to worry about cancer ever again for the rest of their life. That would be the best. That's what we all want. So if that would be the case and they no longer had a disability related to the cancer, they would no longer be eligible for the ABLE account, and they could just close the account, and any money, again, that was remaining, any remaining balances, they would just have to pay taxes on the interest that they earned. Okay, so best case scenario, that's what would happen.
That's a good question. Can an issue arise when someone directly receives multiple gift cards and they go to a store and spend it?
So multiple gift cards.
Maybe they're alluding to the prepaid card. I'm not sure.
Okay, so they would only have there's only the prepaid card is linked to the ABLE account. They wouldn't have multiple the account holder can have a prepaid card and the authorized legal representative can have a prepaid card. Maybe that's what they're talking about, or just one or the other. It really just depends on what works best for the account holder. So they would both have access to the funds in the ABLE account if they were both using a prepaid card.
Okay. Question from one of our good financial advisor friends here. Is there ever a time that withdrawals are required to be made? If so, is that federal law or Maryland's plan rule?
There is no current regulation saying that money has to be withdrawn. You can leave the money in there indefinitely. If you never chose to use it, that would be the account holder's choice.
Okay. Will the payroll deductions be pre-taxed like a 401k?
No, it won't. And again, because this is part of the IRS code, the IRS is going to give you one chance to save money on your and you can either do it by contributing to an ABLE account post-tax, or you can contribute to other types of accounts like the pre-tax version, but they don't let you double dip. So it would be post-tax contributions.
Okay. Can I create an ABLE account for a daughter who is 18 and add myself as an ALR at a later time?
Yes, your daughter who's 18 can open the ABLE account on her own because now she's an adult. She's not required to have someone with her. But if she needs someone later, you can do that as well. You can add that by downloading the form for the power of attorney over ABLE account only, or if you need to consult an attorney about a power of attorney or guardianship, you're also able to do that and send us the papers for that.
And are there fees, and what are the fees for the investment option? Is that noted somewhere, Kelly?
If you go onto our website under the program disclosure book, it's the please don't quote me on this but I think it's like 0.3. I'm not really sure. I don't know what it's a standard investment fee that like all of the investment firms like Vanguard and I apologize. I don't have off the top of my head exactly what that fee is, but it's more like, if you contributed $100 and you wanted to invest $100, they would buy you like $97, $90 worth of the investment, and I'm making up this ratio now. So you don't pay like an additional fee. It's basically they would buy you that amount of investment and keep that remaining percentage. And I want to say it's 3%, but please don't quote me on that right now. But it is available on our program disclosure book.
Is there a way to withdraw cash, and is there a monthly limit to withdrawals?
There is no monthly limit to your withdrawals. It just, depends on whatever your needs are. And we do not have a cash withdrawal option. Some ABLE programs do. We can't use our card like an ATM. The prepaid card does not get used like an ATM card.
Okay. A few more here. The MarylandABLE tax incentive slide says, quote, a deduction reduces your total taxable by the percentage of your highest federal income tax. Isn't this a Maryland deduction only? How do federal tax brackets apply?
Excellent point. Thank you very much. That is a good point. This only applies to your Maryland state taxes. You do not receive tax incentives on your federal returns. It's only a Maryland state tax incentive.
Okay. Can you directly deposit a tax refund check into an ABLE account?
No, you can't directly deposit it into the ABLE account because, again, the only way that you can get money into an ABLE account is through that linked bank account through contributions or through that online gifting page. So if you send someone a link, a family member or someone who wants to contribute money, they can make a direct contribution to the ABLE account through the gifting page. But the IRS, you're not going to send the IRS a link to their gifting page. So they'd have to deposit into their account and then transfer it over through the regular linked bank account.
Okay. Kelly, do you want any more questions?
I'm fine. If folks, you guys have me, as long as Jeff, when you kick me out, I'll go.
We are actually finished with questions, but I want to really thank everybody for the outstanding questions, and I really want to give Kelly also a virtual hand for a job very well done for the presentation, for answering those questions off the top of her head. We kept her on her toes, which is a great thing. We always encourage questions, and want to thank you all for the great questions that you posed and for being a participatory audience. It always makes things always even more interesting. So thank you again for participating. Thanks for being on our webinar today. I think we're gonna have to do this again, Kelly, later in the year. With that being said, we have some more webinars coming up in the next couple weeks. I encourage you to check us out at our events calendar on our website, ableassociates.com. And I hope you all have a wonderful week, productive week, a safe week. And we look forward to seeing you again soon. Thanks again to Kelly and everybody for being here today.
Thanks,
have a great day.
Thank you so much.
It's our pleasure. Thank you.